All right, we are live. Well, welcome everyone
Great.
to today's weekly update. It's December 12th, 2024, and on behalf of the entire team, I want to welcome you to another weekly call. I'm joined by John O'Hare II today. Hello, John.
Good morning or now afternoon.
Yes, he's tuning in from Florida today, so we welcome him here. I'm here in the studio in Wisconsin, and we've got a great lineup of questions for you all today. So to begin, we have kind of a follow-up from something that we introduced last week. So again, we're super excited to roll out a couple of new tools for our clients. That is coming to you soon in your mailbox. So you're going to be keeping an eye out for this information via mail. It's two new platforms that we're introducing. The O'Hare Wealth Management team has made an investment. We have incurred the costs of these tools to provide those to our clients moving forward. So it's really two elements to this. It's Everplans and EverSafe. So just real quickly, overview of this. Everplans, this is where you're going to organize and securely store all types of documents, legal documents, financial documents, healthcare, personal information, and those final wishes. So it's really giving that gift of clarity to your family. It's a place to organize all of this information together in a neat little package for those that you leave behind and to make their lives easier when you're gone and to make sure that your wishes are fulfilled. The second aspect is called EverSafe. So this is a credit monitoring system. It is an account monitoring system. It's going to analyze those accounts. It's going to monitor using all three credit bureaus on a daily basis. And it's really going to be that kind of watchdog for you. So it's going to monitor, it's going to alert you as well as any designated trusted contacts that you have if something doesn't seem right. So if there's unusual activity, things that look indicative of a scam or fraud, it's really keeping an eye out for you and giving you that peace of mind that, we know we live in a digital age where identity theft happens every day. We see it every day, John. We know how big of a hassle that is.
Oh,
So
yeah.
these are tools that O'Hare Wealth Management has again, invested in as a tool. We believe it's valuable. We've already been testing both products and we've already found the value in them. Again, we keep sharing the story, but someone on the team actually did find some fraud as a result of using EverSafe. So we're very excited to roll these out. More information is coming to you again in the mailbox. If you have questions on how to implement this, please give us a call. We're going to be standing by to help everyone get these set up. Was there anything you wanted to add on these, John?
Yeah, no, just that we're very, very excited about this, and everybody should have some type of credit monitoring system. I've used a different service for years. I know so has Jerry and JJ. Jerry had a horrible hack 10, 12 years ago. Someone took out a payday loan and it was a nightmare. So we encourage people to have some type of service. We're excited now that we can provide this service for free to our clients. We've invested money. We will pay an annual fee, but we'd like everybody to use it. The Ever Plans is a neat thing too, because you're finding out that if someone passes away abruptly, there's a lot of information you don't have. And having it in one spot that it can be accessed by your spouse or children or another trusted contact is going to be very, very important. So we're really excited about both of these things. And as Megan said, there's more information coming through the mail. And I haven't even signed up for myself yet. So I've got to get on this and see how they work.
Yep, we're very excited about it. All right. With that, we're going to move into our regularly scheduled programming. Of course, these calls are always fueled by questions submitted by our clients. So if you do have questions that you want to see covered on future calls, please send those our way. Our contact information is there on the screen. You can email us or you can go ahead and call or text us. Let us know. We love covering your questions. So with that, let's move on to question number one for you, John. What did you think of the CPI number that came out yesterday?
Yes, the CPI came out yesterday morning. Uh, Overall, it was on target for what the markets were looking for. Initially, listening to some of the reports, there seemed to be some I shouldn't say disagreement, but we listened to all the talking heads and some thought it was a little too hot. But overall, the bond market ultimately is what you want to watch to see if it's a good number or bad number. And on the shorter end of the maturity spectrum, the bonds rallied, which means if they rallied, they still think there's probably another Fed cut coming. On the long end, they slightly ticked up. There also was a auction of 10-year Treasury bonds yesterday that went very, very well. So I will tell you this, the bond market didn't appear to be upset about it. They seemed to think it was okay and still in line with the biggest problem is inflation didn't tick down more. It just stayed the same as the last 3 months. And some pundits say, well, it's sticky now, it won't go down anymore. No, a large component, roughly 40% of the CPI is shelter, housing, and rent, and that continues to ease. So we always said this won't be a perfect stair step down every month. There'll be some fits and starts, and I think this was consistent with that.
Excellent. Question number 2. Given the strong performance of the stock market over the last couple of years, do you anticipate a weak 2025, John?
We're telling clients to not get too excited about 2025 as far as stock performance. We did have 2 years in a row of 20% plus gains in the broad stock market. That's only happened 4 times in the last 100 years. And most recent, that goes back to the early 1990s or mid 1990s. It's one of those things, long term, we look at averages on the stock market of, depending on the period you pick, it's somewhere between 8 and 12%, meaning 10 to 12 on the high side. Well, 22, 23% a year for a few years, you've captured in 2 years, 4 or 5 years worth of performance. What typically happens is the market has to go sideways for a while to correct that, because now you're kind of on the overvalued side. And we said this after a big run in 2021. We said 22 would be a difficult year to make money. Well, it turned out not to be difficult, it turned out to be horrible. We had a bear market and everybody lost money. I don't see that happening. That was driven largely from the Federal Reserve aggressively raising interest rates. We don't see that happen next year. But if we have a flat or slightly down year, that would be in line, with what the market's done historically. Doesn't mean we're going to time the market and try and get in and out, because we could be wrong. And the market could do fabulous for the next 6, 8 months before it slows down. And we've always said we can't time the market, but expectations should be for more modest returns. The only sidebar on that is if this market just gets too excited about everything happening, maybe the government spending coming from the new administration, and stocks could get run up a bit. They could get overdone. And if that happens, we'll participate because we have stocks in the market, but we would probably be selling into that strength, especially if it went up a lot. And right now we're doing what is prudent. The market's been so strong, we're rebalancing portfolios. So if you had a portfolio that was supposed to be 60% stocks and 40% stocks, over the last 2 years, it's probably over 70% stocks and 30% bonds. We've got to bring that back in line by selling some of the stocks and get it back to a 60-40. And historically, that's just the prudent thing to do, and it tends to help a lot because then you mitigate the damage if we do have like a 2022. But yeah, we're cautiously optimistic. We don't see a down year, but we just don't see a strong year.
Finally, third question here. What kind of things should we be considering as we approach the end of the year, John? I know December becomes a busy time administratively, getting some last minute conversations in with clients and accountants. What kind of things should we be thinking about this month?
Well, I think we have a list of things, and you're right. In December, what happens is a lot of people start thinking about, hey, is there any way I can save on taxes? Now, we are not accountants. We do not give tax advice. But when you read the general information about taxes, making charitable contributions before year end, if you itemize, can be helpful. Donating money or setting up a donor advised fund, which we do, by the way. There's not a lot of time left to do that, but that's another way to put some money in for charity, possibly save some taxes. Folks like to transfer stocks that are highly appreciated into a charity, and this is something else that needs to be done before the end of the year. You can do Roth conversions, IRA distribution requests. It's time to get your 529s invested, before the end of the year if you're contributing those for your children or grandchildren. The other things that we do on a regular basis is what's called tax loss harvesting. And I was doing some of it yesterday. This is where we look for stocks that haven't performed well. We might have some short-term losses in them or even long-term. We will harvest those losses to offset some of the gains we took this year. And we do that on a regular basis for our clients and are very active in that. But there's a few things you should think about. I think this is a good list. Good list to look at. Again, not a lot of time left. And I can see tomorrow is the deadline for donor advised funds. We will still try to open them, but it's on a best efforts basis, meaning we'll do the best we can, but we can't guarantee it'll be open by year end. If you do have any questions on any of these items, give our office a call. We'll walk you through it. And I'll just tell you, if you call on December 31st to do any of these things, it's unlikely to get done because at the end of the year, everybody's trying to get things done and it just won't happen. So take a look at it now. We still have some time.
I was just gonna add, all these deadlines are assuming that any paperwork that's needed is in good order, cash is available. There are other factors that we need to build into these timelines sometimes. So this is strictly from RJ's perspective. They need to have all those pieces in place by those deadlines to guarantee that. So like you said, John, please do not wait until the last minute if you can avoid it. Some of these things are out of our control. There's processing on the back end that is not in our hands.
And just Megan mentioned RJ. That's not some mean guy in the back office.
Yeah, Raymond James. Good old Ray.
Raymond James Financial, which is where we custody all our assets and do all our training.
Thank you for clarifying that.
Raymond James has given us these deadlines, and
yes.
Again, we'll do our best to adhere to them.
Absolutely. All right, good reminders there. Again, if you have follow-up questions on anything that we've talked about, including those deadlines, those end-of-year processing, these pieces of information here are the ones you should have saved in your email, in your phone. These are our main lines, our team inbox. These are always the best places to reach out to us if you need anything fast. So please, if you haven't already, save these pieces of information. It is the best way to get a hold of us. All right, this brings us to our book recommendation for November and December. We're getting to the end here. You want to talk about?
Oh, that's right. Is this the last month for this book?
It is, and I've got a sneak preview of the next one coming up in just a moment here. So if you want to talk about this one, then we'll reveal January, February.
Okay, great. Thinking in Bets, we've been recommended for 2 months. This is a professor of psychology, I believe, and she took a side gig for a while playing poker. And she won a lot of money and was very successful. And now she does consulting for companies about what she calls thinking in bets. And it's really thinking in percentages of outcomes. Whenever you're making a decision in business or in your personal life, there's always a risk it doesn't work. But you should understand that risk. If there's a 8 out of 10 chance it works, that's a good bet. And you should take that. On the flip side, if there's 2 out of 10 chances The old saying, this is like the horse races when you bet on the highest odds horse. You can do that and occasionally win, but most times you're going to lose. So if you're always betting on the the uh, long, long run, long chance horse or thing, you're going to end up losing. You should be thinking about what are the probabilities of this working out over time, and should we do it? It was a fun book. It was easy to read. I would recommend it. I think it's helpful to remind you how to think about making decisions.
So drum roll, next month, we're going to be reading Proximity. I know, John, you recommended this one. So do you want to give us a little sneak preview of what it's about in a nutshell?
Yeah, sneak preview. I just finished it recently. In Proximity, it talks about what they call moment of service or moment of need. We're going to have more and more services and goods delivered to us nearer to our proximity. They talk about building things on the spot. So you want a certain type of shoe, it will be designed for you that day and sent over to you. Or you want certain types of foods, they could be based on 3D printing. They might even be able to make it right there that day for you. And it was fascinating to read because it's happening very quickly, that companies are trying to shorten the time frame before you get something. And they use retailing as a very good example. The way it works now, the buyers for retail stores are guessing what you're going to want next summer, and they're buying it right now. Well, if they could have it made on demand pretty much locally, they wouldn't buy as much at inventory, and they'd make it, maybe the same day or within days of when you want it. But this is happening in every industry. I found it a lot of fun to read. It reminds you of things are continuing to change, but I think they're changing at an accelerating rate of change. But it was a fun book.
Excellent. I look forward to hearing more and picking that up myself. All right. With that, we're going to sign off and thank you for joining us today. Or if you're watching after the fact, thank you for tuning in and seeing what we have to say today. Hopefully it was helpful. And of course, we want to hear your questions for future calls. So go ahead and submit those and we will get those in the queue. So John, thanks for
Thank you
answering those questions thoroughly today.
Yeah, thank you very much, Megan. And it's hard to believe 2024 is almost over.
We're getting
That's
there.
amazing.
It's very close. The holidays are upon us. So if this is the last time you hear from us before the holidays, we hope everyone has a great rest of your 2024. But we'll be here next week, as always.
Yep. Thanks, everybody.
Thanks, everyone.